Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 19th of October, 2017. And as you can see, an up day in the grains, still down in the cotton. We were thinking support in the low 6,700 area via Bollinger Bands. It seems to be getting there. I'll show you that chart in a minute. Sugar market with a slight bounce. Cocoa took off to the upside. Energy markets down. Now remember, tomorrow's the cattle on feed report. Get that after the markets close, and that will be the event that moves the cattle market come Monday. Now, so we look at the soybean market on a weekly area chart of closes. You've been in an upswing, going from $9.35 to $10.25, backing off a little right now. A daily area chart of closes, you had your break to 967 up to 10.1025, fell back a little bit here, and I think that after this 2-cent bounce today, the question is, does the market give more of that up or not as we get on? Let's go back to that weekly chart because you still are down 13.5 cents for the week, whereas on the daily basis you're up just today. Take a look at the daily bar chart. Remember I said this could be a flag. I haven't changed my opinion. This could be the pole, and this could be the breeze, if you will. Let's see what it turns out to be. You know, I hate chart formations because it's a flag one day, a pennant the next day. I mean, there's so many crazy things. But right now, that formation, or this formation, is not bearish in any manner at this point. The swing line could be a different story in a day or so. If you take out 992.25, you would give up this pattern of higher lows and higher highs. So that's the number I'm not looking to be taken out. Now, in all fairness for beans today, while they were up 2 cents, more word came out that the Trump administration is seriously considering putting huge tariffs on Argentina as early as tomorrow. And if they did so, it would create more demand in America to use our own soybean oil, corn oil, and so on to create the biodiesel that would be cut off. I think they're putting a 65% tariff on. That was the talk today. Until we see it, we don't know. When you look at key moving averages, let's assume that you take out 992. Well, the support would be 983 down to 972. Let's assume that's not taken out and we see the tariff news is good and the market reacts favorably. That's how you look at charts, the what ifs. Well, the upper reach for resistance is right now around 1009, the upper Bollinger Band. And recall that the key in Bollinger Bands is that when first hit, they could act as resistance. And, well, I wish I could show down here the support, but that was the initial support. You came down, you moved away, and then you ran down again. But as you can see over and over, those rallies are often resistance zones. It does not mean when you hit them the trend has to change. It's just a resistance zone and no more than that. When I take a look at momentum, what the market has quietly done is worked itself out of being overbought. Overbought means you have a reading over 70. So if you come back a few days, you can see you got up here to 71.17. That's when the market was here. It was higher than that even at this point at a 78 reading. Hit the Bollinger Band, overbought. Often it leads to the price backing off a bit, and that's just what we've had at this point in time. When we go to the meal chart, if the meal takes out, just like the beans, if they take out the lows of Wednesday, both of these charts will turn in with the swing line pointing down with the next objective potentially the 18-day average of closes. If those numbers are not taken out and the market decides to rally, then I'd have 328 as the resistance. The market that had a big outside day up was the what? Soybean oil, and that's because that's the market that the marketplace would suddenly be chasing to get that component to make up for any lost Argentine biodiesel that we bring into America. We have the facilities to make it. It's just that I asked our research department what it could do to this price of soybean oil, and they felt it could kick it up 35, 36 cent area if it all came out and it played the way that the marketplace reports were today. We don't know. Here's what I know as a technician. Take off the name, take out the fundamentals. That's, to me, important. The Bollinger Band, 33.89, that's the resistance. You got the 33.87. You have an overbought market in an uptrend unless today's low is taken out on Friday and or Monday. That means this swing line low holds, and you have a pattern now of higher lows, higher highs, bullish into the Bollinger Band in an overbought market. This resolves itself by either correcting down, or tomorrow you drive up the numbers further and you eventually get an embedded reading where you're locking in an uptrend. I'll wait and see. In the corn market, aren't you tired of this 18-day average getting hit? I am. What about this narrowness in the Bollinger Bands? Very narrow. When I get to the financial update today, you had a similar type of trade in the VIX, and I've been leading you to the idea that because the VIX number was so low, it would be easier to get a pop to the upside than a down. It's exactly what occurred. Will it hold? Doesn't matter. I think it held that way about 25 minutes to an hour, and it fell back into the Bollinger Band. But it was a heck of a pop, and we'll see that later. Well, that's my point is, it could be here. You don't know if you get under this and you come right back, get over it, you come back. All I know is you're basing or topping for something big. Because the price is so low, I would have to think, being around this industry as long as I am, which means I don't know anything, obviously, that this market's trying to base. By the way, an interesting part would be, it was brought up today, and I should bring it to you. I was talking again to the research here. And they brought up something that was interesting. They said, we're not hearing anything about China as this Congress is going on, nothing about North Korea. And they're wondering, with all the trade issues with NAFTA going on, we're hearing nothing about the Trump administration complaining about the trade deficit with China. What if some deal's going to be underway that when this ends, that China comes back in and becomes a big buyer, maybe of our corn, which is a product that they need? I don't know. It was thoughts we threw out. And maybe this is a basing action. We don't know. It's pure speculation, but interesting when you throw out ideas to your people that are good researchers. In the slow stochastic market, you've got both numbers in the wheat under 20. The day before, both under 20, and the day before not. So tomorrow will tell us if this market embeds or gets a bounce to the upside. It did not have very much of a bounce when it lost the embedded reading about 4 days ago. It just laid there. That's rare. So is this market going for another leg? If it does, 424 lower Bollinger Band will be important. If it comes out of this, the 18-day average at 441.5 becomes important. Sugar reminds me of corn. It just keeps riding this 18-day average of closes, and now it's created these narrow Bollinger Bands, which when that happens, it's so hard to be a trader in that market because what are you playing for? It sometimes hits it and turns away. Are you playing for 2-3 cents in the corn? Are you playing here for 30 points? I don't know. What I do know is in coffee, you were oversold. You're leaving that condition. You ran right back to that line in the sand, that 18-day average, and you're holding that at this point. Cocoa. Did I not say, and have I not been saying, each time it's falling to this 18-day average, it's holding, and within short order, it's going back up to that Bollinger Band. It stays overbought. It makes it the hardest market in the world to play, but it's still very bullish at this point. And cotton, remember I said I'm looking for that lower Bollinger Band, and it's right in here, 67.12. You got to 26. The reason I was saying that low number is yesterday's number was 67.22. It can drop a little bit with the math as we go down here too, but you are in oversold territory. In the meat markets, should be no surprise the cattle's just sitting at its 18-day average, the most neutral spot on a chart, waiting for the cattle on feed report. When we get to the feeder cattle, I see a rally up towards that number as it too tries to get back. I consider the neutral line on a chart, the 18-day average. When you're closed under it, you have downside bias, over it, upside bias. But often, when you're playing right on that line, it just means the market hasn't made a decision as to what to do. Hogs remain fully committed to the bull side. You even had a bullish crossover today where the 18-day got over the 100, so I will not be surprised if the market tries to make new highs on this move. The upper Bollinger Band's around 64.92, about 70 points higher. We'll see what happens if the market can get up there. I want you to take a look at something you rarely see. All the stock indices down in one day. Whoa, it's very rare. I want to talk to you about our chart of the day. Now let me explain what this is and where you find it. We used to send it to you. Now we've put it in our charting services. And the reason we've put them into the charting services is that it's so much easier for our clients to work with. What is the chart of the day? Well, first of all, what it does is it works with something called a price count. Now, what a price count does is you get a market like this one. Rallies up, breaks down, rallies again, and then slips. You get a market like this one. Goes sideways at the bottom and comes up. Where might the market head? That's what these red numbers are. That might go down to any of those. Example, if you ran a monthly chart of the S&P, and I don't think the monthly chart's the most reliable chart to trade off of, but if you ran one, today you got up to those objectives that were set back in 2004. Actually, they were set in 2009 to 10. They first hit the first and second objectives in 2014, and now, 3 years later, we're getting up to that third price count. It's just something you look at to get an idea of where might a market head if certain events happen. We have 2 PDFs to teach you how to work this. We teach you right in the software to do it if you want yourself. And then we send out a feature to you. It's put into our charting software every day of what we think are the charts of the day showing that. How do you get it? Give us a call. You can go to our website. It's a free trial for you. You can come right up here, click this on YouTube if you're watching, or underneath us. It says, click here for Ira's free offers. Do so, and we'll put this in your hands. I'm Ira Epstein. You have a great day.